still prevailing. Some of the latest data that we saw when it comes to retail sales really suggesting that it is still pretty resilient when it comes to the Australian consumer, with that spending being boosted most recently by tax cuts, as well as some of the warm weather records that we've seen being set in Australia.
And Heidi, it could be a hold also for longer here in Japan. I mean, we are on yen watch again because of really those weakening moves, especially after more confirmation that the new Japan administration plus the Bank of Japan may be on the same page when it comes to really not rushing into hiking rates at this point. But it was really what was on the other side of the trade, with the US dollar also jumping overnight, that caught our attention. It was the ADP private payrolls numbers rising more than expected. In fact, if you take a look at US data recently, it's been surprising to the upside. And we had US job openings yesterday just rising to the highest level in 3 months. The non-farm payrolls on Friday will be key, especially with the Fed's focus now on the labor market.
And of course, we're continuing to watch the geopolitical tensions continuing to play out across the Middle East. And we're seeing the US sort of, again, trying to be the voice of deterrence here when it comes to further moves potentially from Israel. President Biden really, I guess, issuing a little bit of a warning when it comes to further attacks from Israel to Iran, attacking the prospect, or the concern, of course, is that Iranian nuclear facilities might be the next target there. We have really seen kind of some warnings when it comes to potential retaliation again from Iran as well. Netanyahu has vowed that reprisal against Iran after that barrage of missiles that we saw earlier in the week. But President Biden saying now that Israel should hold off from attacking nuclear facilities in retaliation for that, as G7 nations at the same time are also seeking to try and tamp down on what has become really a spiraling conflict that ever more threatens to pull the US even deeper in at a time where, of course, Sherry, we've seen kind of a very limited influence that Washington has been able to have. Biden was asked whether he would support such a response, and he said that the answer is no. He's set to speak with Netanyahu a little bit later, as well as that planned statement from the G7 as well, with potential further sanctions on Iran.
Yeah, and the implications of potential disruptions in the oil market is really boosting prices at the moment. We're seeing WTI now gaining ground for a third consecutive session. It was really trying to figure out what's happening with the oil markets, with geopolitical tensions that led to not a lot of movement when it comes to US stocks. Right now, futures pointing slightly to the upside, but it was just a marginal move in the overnight session, trying to gauge what's happening with the US labor market as well. What we really saw was the Treasury yields gained ground, of course, after the stronger than expected data, and that led to the dollar seeing its highest jump and the highest levels in about two weeks. On the other side of the trade, take a look at how we're setting up in the Asia session, because we could see more gains for Japanese stocks given those losses in the Japanese yen. And that move was really interesting. After we got the ADP private payrolls data, we saw really the yen rallying or weakening past that 146 level against the US dollar. It was already at around 144 after the new prime minister's comments on the BOJ rate hiking path. But really, those two moves combined really sending the yen down against the greenback again. And of course, the offshore yuan holding steady at the moment. Korea away on holidays. Our next guest is expecting another 50 basis point rate cut from the Fed in November. Let's bring in Terry Spath, founder and CIO at Zuma Wealth. Terry, great to have you with us. How are you seeing the U.S. labor market? Are we pricing in too many Fed rate cuts given the new trajectory of this economic number?
I think you guys have covered some great number of risks of what's going on just globally in investors' portfolios. Everything that you covered, I thought was just fascinating. And one of which, as you talked about, there's this risk right now of inflation rearing its head again here in the U.S., right on top of when most people are expecting the Fed to continue its cutting cycle. I think they probably will cut in November, as you mentioned, even though they'll continue to collect data. And I do think that there's some risk that we've got some inflationary pressures, as you talked about, with tensions in the Middle East, pushing up oil prices. I think that we're really going to see some risk for inflation with the payrolls number, as you pointed out, being a little bit stronger than expected. At the same time, with this sort of trajectory for the Fed wanting to cut rates, it's going to be a tough one for them come November. I do think they end up cutting, despite the fact that I think we could see some risk to inflationary pressures to the upside in the next couple of weeks.
And I haven't even gotten to the dock worker strike across the U.S. right now, right? How do you position in the markets if you're factoring in potential inflationary risk?
Yeah, I think it's tough. I mean, you highlighted the dock workers strike, and I do think that that's something that's not quite getting as much coverage as you guys are giving it right now, and it's less understood. We're only, I think, 2 days into this dock strike, but it could very quickly turn into a big problem for a lot of companies here in the U.S. We've got, this strike is impacting docks from, I think, Texas to Maine. If they have docks in Maine, we don't have it here in California yet. But this could very quickly cause disruptions in business operations, hits to earnings, and also cause inflation because of shortages of goods. And I think that's something that could contribute to some risks here in the U.S. And it's why we're really emphasizing some of these markets that you were just talking about in Japan, for example, where there's going to be probably less risk and a little bit better return for investors, because I do think that this dock worker strike, politics, potential inflation risks because of the Middle East are all going to hit the U.S. A little bit harder than other areas around the globe.
We haven't even gotten to China yet. And Terry, as you mentioned, we do really need to talk about it. I want to throw up this chart to take a look at just how speedy we've seen the reversal of fortunes when it comes to Chinese risk assets. And part of this obviously is because they were coming off such cheap valuations. But until 3 weeks ago, China was last in this group across the MSCI. That is now coming in first. It's really kind of a world-beating rally. I guess the question is how sustainable this is. And do you see this as a reflation risk sort of globally, or at least a sustainable, turnaround when it comes to how you view Chinese assets right now?
Yeah, we do have to talk about China. So I'm glad you brought that up, because it was an area that we, as well as many others, have been quite negative about for a long time. But these massive stimulus measures that have been unleashed in China have really resulted in the sharp and kind of a nosebleed rally in Chinese stocks and stock markets. And all the changes are good. They're good, positive changes, sweeping stimulus measures, rate cuts, lower mortgage rates out of the banks, a range of monetary easing, a lot of injection of capital to encourage lending. And the way that investors can play that is through ETFs, such as a ticker MCHI, that's iShares for China, PPGJ. Those are good ways to participate. But as you pointed out, it's been a huge rally in a very short amount of time. RSIs are really high. So I do think that investors can buy right now, because relative to where these stock prices were in the past few years, we're still below that. And you're going to have the opportunity as well. There's going to be pullbacks in these stocks. Whoever comes into office in November, they're going to be negative on China. So you'll see some pullback, but you can also participate today and just sort of leg in.
Yeah, and how do you get that exposure? What's your preferred avenue through here?
I think either of those ETFs, that iShares, MSCI China, that gives you a more diversified approach. Both of those have really good exposure to mid and large cap stocks in China. They've had huge runs, as you pointed out. but are still quite a bit below where they were in years past. So they still have opportunities to run, and also pay attention. There will be pullbacks, so you'll get some more chances between now and year end as well.
Terry, you mentioned the favorable environment, for example, for Japan. Where do you find exposure at a time when we really don't know the direct direction of the Japanese yen?
Yeah, we don't know the direction of the Japanese yen, but we probably often don't. And if rates go up in the US, which they might, if there's inflationary pressures, then that's going to pressure the yen. US interest rate environment is just to the downside. That's going to favor the yen. And so we just think investors should make sure that they have some exposure, because still, even with the nice run that we've seen in Japan, we're still underweight in most investor portfolios, probably in your viewer base. And so make sure to at least have a market weight just through a general ETF that represents that country. And you'll be able to continue to participate in what we think will still be over the medium term strength for the yen going forward versus the dollar.
Terry, great to have you with us. Terry Spath, founder and CEO at Zuma Wealth. Coming up on the Asia Trade, we'll be talking volatility across oil markets. Invesco and Vander Insights join us as the conflict in the Middle East escalates. Plus, for the Japanese AI ecosystem. This is Bloomberg.
And wherever it happens. I'm Anne-Marie Herder in Ukraine, and this is Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data.
Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Shorting a stock purely because you think it's expensive is a death wish.
These are companies that are growing their market.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Jobs. And Marie and Mike will bring you crucial data and expert analysis at terminal speed.
Are we losing dynamism in the labor market?
We don't have a jobs problem at the moment.
It all comes down to what the data says.
How important is that payroll data going to be?
The September Jobs Report, Friday on Bloomberg.
Iran's missile strike were a necessary and proportionate response to Israeli continued terrorist aggressive acts over the past 2 months. The regime is pushing the region to the edge of an out unprecedented catastrophe. Israel
Iran's ambassador to the United Nations is speaking to the Security Council on Wednesday. That it was a sort of consistent missile attacks from Israel that really, I guess, forced Iran's hand in responding here.
Yeah, I think it's a bit of a spurious argument. I mean, Israel hasn't bombed Iran. Israel's fighting a separate state, Lebanon. It's not fighting Iran. We know that Hezbollah is backed by Iran, and Hezbollah is heavily armed and financed by Iran. But Israel hasn't been firing missiles in there. It did presumably assassinate the head of Hamas in there. But I think that, this is the second attack by Iran. And while the first one, they gave plenty of warning, they sort of almost wanted the US and Israel to shoot down these missiles. They were faster missiles this time. And it's very easy to sort of look at this. But 200 missiles is seriously destructive. And it's an act of war, basically. It's very, very difficult to there's fault on all sides, definitely, but Israel, in many respects, if and when it responds, it does have a very good claim. It's just defending itself there. And
Netanyahu has said that he would respond for the missile strikes. It's interesting we're seeing sort of Washington trying again, perhaps, with limited front.
He hasn't. No, it's very true. And I suspect when it comes to state-to-state conflict with Iran, I suspect that Biden will be more influential there. It's one thing when you're talking about southern Lebanon or Gaza. These are localized areas. Israel has them very well penetrated with intelligence and that sort of thing, and it has a better better judgment of the risks and rewards there. With Iran, we know it's a state that's probably fairly close to having a nuclear weapon. It hasn't pushed on with that as a war with Iran. The US will be dragged into that. So I think Netanyahu's going to have to be a lot more cognizant of what Biden.
For the shooting and stabbing in Tel Aviv earlier this week as well. Mike, this just continues to escalate.
Yeah, Sherry-Ann, that's exactly right. And I think it's tragic. Hamas's, its conventional weapons in terms of missiles or rockets or those sorts of things. These groups like Hamas are probably going to end up going back to where they sort of began, which was terrorist attacks or lower scale violence like this, because they've almost become Gaza in a sense was a mini state in a way, self-governing. They almost have become like states there, and these fights have become sort of army to army. But if this is what they choose to do and return to that, then it again to Israel. There's been terrible attacks on Israeli embassies and other outposts.
Bloomberg's Michael Heath there with the latest on the Middle East. Now, other stories that we're following at the moment, the U.S. Central Intelligence Agency is boosting efforts to recruit Chinese citizens. The CIA has issued Chinese language instructions on social media detailing how people can securely contact it on its public and dark websites. The move comes as Washington struggles Nordic countries to create a new Arctic security coalition. Foreign Minister Melanie Joly told Bloomberg that talks are needed because the northern allies don't meet at the political level anymore, partly due to Russia's presence on the Arctic Council. Joly says the Russia-Ukraine war and China's
You talked about how governments are not looking at healthcare and investing in healthcare as much as they should. What's the message you'd like to send to those governments?
Well, I think a healthier population is always going to be more productive. It's just that some because a workforce that is 20 or 30% down during a pandemic or an outbreak other costs. I think it's important to invest early in health, in child health, in women's health.
Momentum from Wall Street. We are basically deep in the European earnings season.
For the Fed to keep cutting interest rates right now, warning the U.S. economy risks becoming overstimulated. Speaking exclusively with Bloomberg, Ron also outlined his concerns about economic management ahead of the presidential election.
The notion that we are spending $2 trillion in excess of what we take in peacetime with full employment does not
in reality?
Let's hope. All we can hope for is better governance.
I've said repeatedly.
We have lots of examples around the globe of people who have acted recklessly for a much longer period of time than we have been acting recklessly. But we also have obligations that others do not. Right now, we are the beneficiary. Ago, we decided to build infrastructure. We allocated $2 trillion. None of that's built yet. It's all being built. It's all being built. A year ago, Inflation Reduction Act to encourage the manufacture of renewables. 1.3 to 2.3 trillion. No one really knows. Not a single plant is opened. We are the beneficiary and the largest recipient of foreign direct investment 3 years in a row. So people around the globe are actually figuring out we're better off here. And something tells me we're ramping defense production.
Agree or disagree with Torsten, of course. Torsten works here. He believes this economy doesn't need rate cuts. We're in a great...
The notion that we would cut rates, financial markets are wide open, equities are at all-time high, financing is available, real estate prices are going up in every market, and yet we're stimulating. For the quarter, to the extent we accelerate the economy and have to go in the other direction, that would
Policy Macron, they're speaking exclusively with our colleague Jonathan Ferrer. Time now for morning calls ahead of the Asia trading day, and Scott Rubner of Goldman Sachs says a rally in US stocks market says his target may be too low as seasonal headwinds failed, and stocks tend to rally after US presidential elections. But Rubner also added that he remains tactically bearish on US equities in the next 3 just relying on monetary policy.
I personally have been worried about just the underlying inflation happening now. We have increased wage demands. My instinct has been that all of those things find that the underlying trend, inflation rate is a little bit higher.
Perhaps overall resilience when it comes to services. Bond yields are extending the rise at